So today I want to talk about a little bit of good news with interest rates. And if you want to know more about that, stay tuned because we're getting started right now. Hey y'all, I'm Debbie Dobbins and I'm your host for this episode of your Wichita Falls. So today I want to share a little bit of good news about interest rates, especially for you first-time home buyers who are sitting on the sidelines going, oh my gosh, I'm never going to be able to buy a house because these interest rates are out of control. And I've done a couple of videos on what's going on with the interest rates. And that being said, these are not forever. So please don't get stuck on the idea that these interest rates are going to be here forever. I'm going to give you a little bit of a market update. These interest rates have actually dropped. Yes, what did she say? They've dropped a little bit in the past few weeks. Now, what does that mean? What does that mean as good news for home buyers? What does that mean for good news for sellers? What does that mean in the overall scheme of things? Because what most people don't know is they see the headlines, they hear the headlines, they freak out about the headlines, and then they pass that information around and it gets built out of proportion. And the fact is that, and I've shared this on many videos, interest rates go up and down and up and down and up and down, even when they're in the low twos. Even when they were in the low threes a year ago. The fact of the matter is that the interest rates are driven by the bond market. Now, the Fed does whatever the Fed does, and I've talked about that ad nauseum, about the Fed fund overnight lending rate. That's what they're lowering and raising. The bond market is looking at other parameters, and they're trading just like the stock market because they are a trading market. So over the past few weeks, the average 30-year fixed rate mortgage from Freddie Mac and Fannie Mae, you all probably heard those names, fell by about 0.5%. Now, why did they fall? Here's the thing, is the stock market, if you have any money in stocks, you're always looking at the stock market. What is it doing? Going up, going down, and you get all Twitter-pated over that. And the fact of the matter is that that stock market is exactly like its cousin, the bond market. It's driven by what is happening in the overall economic market and the climate. There are economic reports that come out basically almost every single day that drive what happens in the bond market and the stock market. So if you're very attached to the stock market, you might want to take a trip over to the bond market and watch that for a bit of time. Because what's happening is, I think I predicted this, the bond market has very serious concerns about a potential recession. Recession. You know, the Fed is trying to quell inflation. But here's the thing. What a bigger problem is if you raise those rates too high for people to borrow money and all of the other problems that we have that go along with it, with our gas prices and our supermarket prices and all the prices that I've talked to you about over and over and over, we start to see signs of a recession. A recession, you cannot continue to have high interest rates. You just can't. So what happens is the bond market starts to trade based on what they foresee, not what is actually happening. That's the same thing that happened with the rates when the Fed started yakety-yakety-yakking, and I invite you to go watch that video. They were yakety-yakety-yakety before they actually raised the interest rates. And the bond market responded immediately, 2 days before the Fed actually raised the rates. So since mortgage rates have risen dramatically this year, the home buyers across the country should see this actually now, this decline, as welcome news. This is good news. Now, it's not good news because we're going into a recession. And here's the thing that I really want to make a point about, and I say this a lot, is that we are always going to find our way through any dilemma that's happening because we have a free economy market. But the fact is that people get very attached to what's happening in the very, very moment of time. They're not looking at the past and they're not looking at the future. They're looking at what's happening right now. So what's happening right now is interest rates have gone down just a wee bit. But Freddie Mac has reported that this average 30-year rate was down to 5.3 from 5.81. But that was 2 weeks ago. So things are moving, they're shifting, they're going in a different direction than what is this trajectory of up to 7%. And I predicted this about where these interest rates were going to get several months ago. But you really want to notice on this graph that I'm going to show you that this was how this trajectory went. Why is this recent dip such good news for home buyers? Well, hello. The Senior Economic Director of Forecasting at the National Association of Realtors, that group I belong to, which I think is hilarious, but they're projecting, just like everybody else, what's about to happen. And they have explained it this way. So I'll just take somebody else's explanation rather than putting in my 2 cents like I always do. According to Freddie Mac, once again, Freddie Mac, Fannie Mae, these are the people that are actually going to pass these rates on to you. The 30-year fixed mortgage rate dropped sharply by about 40 basis points, which is about 0.5%, to 5.3. And as a result, home buying is about 5% more affordable than a week ago. Holy cow. You know, they're debating whether to get in and out of the market right now because they're listening to the headlines. I wish people would listen to me because the fact is that this is a great time to buy, regardless of what anybody says. This translates, as she says, to about $100 less every month on a mortgage payment. You know, waiting to see what rates are going to do, waiting and waiting and waiting. I've got people that came to me that rented a house recently that called me a year ago and said, oh, everything's going to calm down pretty soon and things will be better. And I said, please don't wait. And I'm telling you that now again, please don't wait if you think about buying a house because things are not going to shift that much. And if we do have that refinance experience that I have predicted in a few months, then you're going to be able to refinance your mortgage anyways. Because when rates go up, as they have, well, let's see, for the majority of this year, they impact how much you pay in your monthly mortgage payment, that's true. And it directly affects how much you can comfortably afford. But the inverse is also true. A decrease in mortgage rates means an increase in your purchasing power. So let's not wait around to see what's going to happen because I can tell you the people that have been sitting on the sidelines for the past year are regretting that decision immensely. And I've been saying it for a year. Things are not going to shift that much. But right now, as I've said over and over, the average interest rate for the last century was 7%. We're not there even close to it yet. I was doing 5.5% refinances 20 years ago. 20 years ago. And that was absolutely a
phenomenal interest rate.
So please stop thinking about it in comparison to what it was last year because those were historically low rates and we're probably not going to see those again unless we have a massive COVID explosion in the world. There's a chart that you can see how this 0.5 point or even a 1/4 point can change interest rates and impact your monthly payment. But sometimes if you get too attached to that amount, you have analysis paralysis, you get stuck, and then you end up paying 0.5% more. So what I can tell you is rates are fluid. They're always moving. And the only thing that is important to note is you cannot lock in an interest rate unless you have a property. So go out, find a house, buy a house, and then lock in this interest rate because we still have low interest rates compared to what they have been over the last century. Trust me, I know. So what's the bottom line? If your home doesn't meet your needs, this may be the perfect opportunity that you've been waiting for to go and find that dream house. And please, as I always say, there's a Zoom link in the first comments below. Go schedule a Zoom link with me and I will be happy to share more about this, how you qualify, how you can find that dream home, and how you can take advantage of these interest rates as they are today. And as I always say, y'all come back now, you hear? Bye-bye.